Hello everyone. Yesterday around 5:40 p.m. Indian time, Trump made a post about India in his Truth social media, which immediately crashed the gift Nifty by 200 points. So let's look about it first and then we'll discuss our regular pre-market report for today 31st July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. If required, please pause and have a look. This is the Trump long post about India. Basically, what he said was, so far in all those last many years, US companies can't able to do business with India because of the huge tariff barrier. And though India is friend of US, India continued to buy defense equipment and oil from Russia, which he felt unreasonable, and so he said he is implementing 25% tariff plus the unknown penalty for the India's closeness with Russia for all the goods from India that entering into US from August 1st onwards. So it's a huge threat. And as we see, the moment when Trump made this tweet, immediately from near 24,875, Gift Nifty fell all the way down to 24,675, 200 points instant drop. And today early morning, it further dropped and traded at 24,655, hence equating that with the spot market. For now, it's indicating the gap down opening of over 200 points. Then coming to US market, last night as most analysts expected, Fed paused the interest rate. However, for the first time since 1993, two FOMC members voted differently. Just for everyone's benefits, FOMC consists of 7 members and it appears in all the last 32 years, most of the time all the members voted unanimously, whereas in very rare cases, one member might cast their vote differently. Now last night, 2 members opted for the 25 basis point rate cut and 5 members opted for the pause. So as per majority, Fed did pause the interest rate decision. Then in the press conference, Fed chairman said the labor market demand softened now, so as the supply as well, because of all Trump immigration policies, and hence the unemployment rate is near still low. So Fed members believe they don't have any pressure for rate cut, especially when they have uncertainty around the tariff and its influence. In response, if we see the S&P 500 price action, after the interest rate pause announcement, it traded mild positive until the Fed chairman press conference. And during the press conference, it had the negative momentum, but in the end, it managed to recover most of it. In the end, Dow Jones was down by 0.38%, S&P 500 decreased 0.12%, whereas Nasdaq increased 0.15%. Despite all the volatility, VIX decreased 3% and moved to 15.5 from 16. Then after the US market close, Microsoft and Facebook released their quarterly results and both of them posted very good numbers. So in the aftermarket hours trading, Microsoft increased near 9% and Facebook increased above 11%. Hence now US future market, especially Nasdaq, now trading near 1% positive. Then, despite all the positives in the US market, none of that was reflected in the Indian ADR. All the major Indian ADRs fell about 1.5%. And if you see the arbitrage, all the 5 stocks having negative difference of around 1 to 3%. About oil, it didn't change much. WTI crude trading around 70 US dollars per barrel and Brent crude trading near 73 US dollars per barrel. So those were the things happened on the dollar market. Let's move to the India related info. About institution, in the cash market for the 8th session in a row, FI was net sellers. They net sold for 850 crore rupees and DAI net bought for 1830 crore rupees. Then about derivative market, yesterday in the index option, overall, open interest was driven by new put option addition around 7.5%. Despite that, proprietary traders and FII sold significantly higher call options. Hence, proprietary traders from around neutral stance on Tuesday end turned negative. At the end of yesterday, they had net near 3% of their open interest favors the bearish position. Similarly, FII wise, they held net 4.4% open interest on the bearish side. On the contrary, retail traders increased their positive stance. At present, they are having net near 8% of their open interest on the bullish side. Then index future wise, more or less each participants maintaining their respective stance. Retail traders and proprietary traders having 72% and 58% of their open interest respectively on the long side, whereas FIA having 86% of their open interest on the short side. Overall, combining, it seems proprietary traders and FIA makes more money if market expired down. On the other hand, retail traders makes more money if market goes up. As a summary, US Fed Chairman press conference was a bit hawkish. However, Microsoft and Facebook quarterly results improved the US market momentum. Hence, global momentum didn't get affected much. Still, as we discussed, because of Trump, our Indian market indicating a huge gap down opening. Please note, today is monthly expiry and tomorrow is Trump deadline for the trade deal. So we could expect the market to be volatile. One more thing, as everyone knows, most of our pharma companies depend on US market export. So all those stocks will be on focus today. Yesterday, as per stock open interest, PNB, Hero MotoCorp, LIC Housing Finance, Wipro and Lupin are some of the 72 stocks that got an increased open interest along with a negative close indicating the short build-up. On the other hand, Mankind Pharma, IREDA, KPIT Tech, AU Bank, Page Industries, Voltas and DMart are some of the 41 stocks that got an increased open interest along with a positive price close indicating the long build-up. About the things to look out, Hindustan Unilever, Maruti Suzuki, Coal India, Aker Motors, Sun Pharma, Adani Enterprise, Ambuja Cements and Swiggy are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, before our market opening, Japan's industrial production growth, Chinese manufacturing PMI data, and Japan's industrial decision is due. Then during our market time in the afternoon, France consumer inflation, Germany and Europe's unemployment rate is scheduled release. Finally, after the market close, US PC inflation, weekly jobs data and Chicago PMI data are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 70 points gap up. Then in the first half, it had some minor volatility. But in the second half, for most part of the day, it traded around 24,850 and closed there. Thus, on the daily chart, Nifty formed the bearish candle with a long lower shadow like the hammer candle with higher low and higher high formation. Meaning, sellers tried to push down the market but buyers were strong enough to push it up, which is a minor positive. However, it's still trading below all short and medium term moving averages, and though RSI and MACD indicators improved, but still both are signaling the sell signal. Here the 50-day exponential moving average is around 24,900 mark and the 20-day exponential moving average is around 25,050 mark, and those are the immediate resistance zone. Hence, as long as Nifty trading below this range, I expect the consolidation to continue. On the lower end, same 100-day exponential moving average around 24,600 expect to provide some support. Then in case of Bank Nifty, for the second day in a row, it underperformed Nifty. It opened marginally positive and traded flat with some negative bias for most part of the day and closed marginally negative. Thus on the daily chart, Bank Nifty formed the medium bearish candle with minor lower shadow. However, despite that, for the second day in a row, Bank Nifty defended its 50-day exponential moving average and negated the lower high lower low formation from the last 3 sessions. So 55,800 to 55,700 support zone will be critical. Sustaining above this band is essential to maintain the current short-term positive bias. Whereas on the upside, 56,400 to 56,500 resistance zone is a significant barrier, and a decisive and sustained breakout above this level could trigger the pullback rally. Then on the options front, the maximum call option open interest was at 25,000 strike, followed by 25,500 and 24,900, with maximum new call option rating at 24,900 strike and then 24,950 and 25,500. On the put side, the maximum open interest was at 24,800 strike, followed by 24,700 and 24,500, with maximum new put option rating at 24,850 strike and then 24,900 and 24,800. Thus, from options data, it's suggesting strong resistance at 25,000 to 25,100 level and support at 24,700 to 24,600 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the algorithm and also motivate me to do more. Please don't make any investment based on this, as not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.